Greece, we know the country is going to get help. We're just still waiting for the details. Who pays? How? Our next guest says that Europe should use the opportunity to create a true bond market. Marc Chandler is global head of currency strategy at Brown Brothers Harriman. He is the author of recent books, well, many books, but the most recent being Making Sense of the Dollar. Marc, we're so glad you're joining us here on the program. So you say create a true euro bond, but don't you think the stronger members of the region want less to do with the region and not more right now?
Yeah, no, I'm not so sure about that. I mean, first I'd say, you lead in, you say that there's a package in the works. We just don't know the details. And I think that's just a point, is that what the European officials, the heads of state offered yesterday was words, was mostly bluster and little luster. And by that luster, I mean like anything material. There's been a lot of talk of something substantial. And I think that what they're saying is that we're only going to step in if Greece needs our help. Greece isn't asking for our help. It's sort of like watching someone play with matches and having a fire extinguisher close by, just in case they catch themselves on fire.
So Marc, it seems like, I mean, not to be critical, but they can't even coordinate on this rescue package, which has been weighing on the markets for weeks. How are they going to coordinate on structured debt?
Yeah, no, you're right. I mean, this is the real problem. I think that at its essence, the problem is that Europe is really a great experiment of our generation. Is monetary union sustainable without political union? And this week, for the first time in quite a long time, you've heard some European officials talk about economic governance. Greece is going to lose a lot of its sovereignty. Already Greece is being sued by the EU over its statistical collection, and now there's going to be a foreigner, that is someone from the EU, in Greece, monitoring how its economic data collection goes. Greece is going to have to make a report in March, how it's implementing its program, and then again in May. This is a serious actions here, but I think that they're serious only in so as sort of forcing Greece to do what they think is the right thing, despite what the Greek people are doing, and that is protesting, trying to balance the budget, trying to reduce the deficit by 4 percentage points on the back of civil service workers. Ain't going to happen.
Marc, this is Scarlet in the newsroom. You say that there's plenty of, or this could be a possible solution, the development of a European bond market. Sure. But there are plenty of fires to be put out right now. Greece is just the latest. Spain, Portugal could be a fire in the future. What would need to happen before this could be a serious consideration?
Well, I think that part of the problem is a technical problem. That is, it's not clear. I mean, the European Bank of Reconstruction and Development, for example, issues bonds, but that's really for the sort of the developing parts of Europe. And so it's not clear exactly how it can be, how a European bond market can emerge. But it seems to me, and this is what I try to suggest to sort of the proposal really, is that what's needed for one of the things that the U.S. has that Europe doesn't, besides greater integration, of course, is that we have a deep, and apparently it's getting deeper and broader every day, U.S. Treasury market. And what Europe needs, Europe doesn't really have a bond market per se. There's a German bond market, there's a French bond market, but not a European bond market. I'm suggesting, unlike some of these doom and gloom people that you've had on your shows and that people are giving their opinion, talking about a breaking up of Europe or a dissolution of the Eurozone, I'm saying quite the opposite. The solution is going to be greater integration, not less of it.
One thing that we can criticize from our own shores, Marc, is that this ability to pile on debt over debt. Why would the Euro region want to follow us in that way?
I'm not sure what you mean by that. I mean, I think that, here's the problem, is that the European bank, we in the U.S., our banks lend to subprime, all these structured products, mispricing risk. Europe has a similar type of problem, lending. That is, the banks have lent a lot of money to Spain, Portugal, Greece, Ireland. And when you look at that, what's happening now, many people were afraid that the private sector debt, this was what really people talked about in the U.S., the private sector debt was going to become a sovereign debt problem. But that's not the case in Europe right now. What's happening is a public sector debt problem is starting to become a banking sector problem. The European banks have roughly a little bit more, at least according to the Bank for International Settlements, as of late September, had something like $2 trillion in loans to these highly debted parts of the Eurozone. So what they're afraid of is that the problems that the sovereigns are having could trigger a new round of banking crisis in Europe when the IMF says they have already, the European banks are behind U.S. banks in fessing up to and revealing the magnitude of their debt.
Marc, we do thank you for your time. Marc Chandler, Brown Brothers Harriman, talking about creating a true Euro bond.